Okay. Okay. So we're recording right now, and can you guys see my screen?
Yes.
Okay, good.
Yeah.
All right. Let me open this up. Boom. All right. Charts. Okay. Let me remove all this. This way we start out clean. All right. So what we're going to do right now is we're going to review reading levels, and we're also going to review yesterday's entry. Okay. So right now we have Bitcoin right there. Oh, that's a lot of activity. Get rid of this. Boom, boom. Okay. So got the 4-hour chart. So right now what I want to do is I'm going to drop my moving averages in here. All right. 1, 2, 3. Okay, so my EMAs, I like to do yellow on my 20. There we go. Okay. Yellow on my 20. 50 on my baby blue. And this one is white. 200. And you know, the these here, this is all market maker stuff right here, right? You've got the mustard, the water, and the mayo line. I removed the 13, which is the 5, and actually the 5 was the yellow, the red was the 13. I removed the 13 because I don't, we'll just keep it no catch up. You guys know all about that terminology?
It's new.
Oh, it is
but,
new.
but you're talking about the EMAs, yeah.
Yeah, that's how he does it. The ketchup, mustard, water, and the mayo.
Okay.
Yeah. Anyways, so when I'm counting levels, here's what I'm looking at. So your example that you had given me, let's go to the 1 hour. Now, market maker methodology describes widening of the mouth between, in fact, I'm going to turn off this 20 for now. All right, let me see, boom, hide. He describes that the widening of the mouth is a level 3. So in this case, we could identify this as peak formation low. Does that make sense? And why do we know this is peak formation low? Because on the 4-hour chart, even on the daily chart, right? This is daily chart right here. On the daily chart, we are testing equal lows right there, okay? So we go back to the 4-hour. We could actually call this switch market structure from this point all the way up to this point right there. That's switch, SMS. Let me label this really quick. Boom. Okay. Okay. Since we're testing equal lows on this here, right? That was my entry, but we'll go through that later. For right now, let's just count levels. Okay, so what's the whole purpose behind counting levels? Because theoretically, market maker likes to move in threes. He likes to move, and 3 is a significant number. If you go back and you Google significance of threes, it's a prime number. It's also a psychological number, and in art, 3 is a big deal because when you take when artists are drawing, they break their photo up into 3 parts. Are you guys familiar with all that? You could do more research on all that, but yeah, so that's a really deep psychological number, 3. So market maker also operates off of function of 3. In fact, Elliott wave is a function of 3. So is it always precise? No, it's not. But it can give us a measuring tool of when we hit a peak formation. Give me a second. I'm gonna see if I can brush. Let me see something. Yeah, this is it. If when we hit a peak formation, which is this, right? We should expect push, 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 Does that make sense? So the significance of threes is that it allows us to tell for us to know where we are within what's called the market maker cycle. All right. How do I erase these? Hold on a moment. See, I'm creating things I'm just trying to figure out how to erase. Let's see. Boom. Okay. So again, what it's going to tell us is where we are within the cycle of the market maker's cycle. Okay. On this example right here that you had given me, you had indicated as these three as, in fact, let me highlight it. One,
basically marked level 1
two,
into 3 sections,
3.
and it's not even finished.
Yep. Yep. Now, however, on a micro level, this is correct. Think about it. Look, in fact, take a look at where we are. We're pulling back.
Yeah,
Makes sense?
that's crystal. Yeah.
On a micro level. However, according to the pattern of market maker and to identify where we are within the market maker cycle, we are still in level 1. Level 1 would be identified as, let me start boxing this stuff off for you so you can visually see it. Here we go. Rectangle. Okay. Here's peak formation low, right? All right. And then I'll give you my opinion on reading levels shortly after, once I mark all this stuff up. Okay, that's level 1. How I'm reading this is going to be level 2. And the reason why is because I see price doing this. Oh, there we go. I see price coming up here and then testing see all this liquidity. This liquidity is what it's going to test. It's going to come down and test it. And I think it's going to test it and do a little bit of dancing here and then come up for a level 2. See how that worked? All right. So that's how I see it. All right. Let me see.
Well, if that's the case, then we'll most likely have a BMS then, right? To the upside then, right? Well, possibly.
Yeah. Yes. Okay. Well, so that would be a level 2. I'm going to show you a few things. All right, so let me just mark this off really quick here so get it clear. Now, this is just what I'm anticipating, right? But we're going to go back and backtrack it this way. Oop. Level 1. And you had sent me an example with a reset, and oh my Lord, what was that? Okay, here we go. Level 2. Okay, so that's level 2. Would we see a level 3? I don't even know. Not even sure. In fact, the reality is typically level 2 is much broader than that. It's probably going to be like this, and it's going to bounce around here, and then it'll push. So the best case scenario would look like this. All right, hold on. Polyline. Okay, so that would be level 2, and then it's going to come down and test that high, and then it's going to go level 3 up here, break above this liquidity line here, right? And then it's going to seek like, let me see if I can go. It's going to look to create another peak formation. That will be the most ideal. And then we head back down. It makes sense?
Okay.
Right. Okay. Yeah. So that would be most ideal, but I don't know if that's going to happen. And I'll tell you my thoughts in a moment. Let's see. Okay. So that would be level 3. Peak formation high. Actually, this is peak formation low. Gosh. All right. See, Justin, even as long as I've been doing this, I still get a little. Don't ask me what my left and right is. Okay, so according to market maker methodology, a level 1 will be defined on the crossover of the 50 and 200. You see that right there, these two? So the 50 EMA and the 200 EMA need to cross over. Okay, let's go back here, back in time, and look at peak formation up here, this here. Okay, and we're going to mark it on the way down and see if you can grab at that. Okay, so that's peak formation, right?
Okay.
Otherwise known as swing high. Now this is this would be where you would drop your major. This is a major structure right here. If you take a look at the 4-hour, right?
Yeah, it's the highest point
Correct.
since we fell.
Correct. So if you were to kind of like hit the peaks, peak, 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 peak. You see it? So this would be a peak. This would be a peak formation. Major structures, right? Major structure. We're looking for another major structure right there. Boy, that's a lot of lines I got to go back and do. Oh, I totally forgot. This is how you do it. Here we go. Okay, polyline, rectangle, trend line. Okay. All right.
Oh,
So
you
I
can
see.
just put nice. How did you open that? Which one did you press?
Oh, on the bottom, you see these little
Okay.
object tree?
Paper stacks. Okay.
Yeah,
Yeah.
stack of paper. Yeah. Yep. Yep. Paper stacks. I like that one. Okay. So let me drop this back to the 1 hour. And again, the whole purpose behind identifying peak formation high and low. In fact, you know what? That's really, really high. We're going to go to this one, okay? Because this is the most current. We're going to drop it there on the 1 hour. That's that 36,000 line.
Can I backtrack and ask a question? Just because.
Yep. Go ahead.
So on the peak formation high you were just at, which was the lower high around 40,000.
40,000. Yep, up here. Yep.
Where the 50 and the 200 crossed at that order block or that liquidity, that was kind of where level 1 ended.
Correct. That was level 1. Yep.
And then the next set of order blocks below that, where it starts to widen, is level 2.
Right here. Yep.
Where it got super, super wide was level 3.
Right. Actually, this push here became level 3. Yes.
Yeah.
And which includes a little of this, and then this became peak formation low. That is correct.
Just that drop was the peak formation, not even the liquidity.
Correct. That's it. So let's just box that off really quick so we get a visual, share it with all the Zoomers of the future. Okay. I'll expand these in a moment. Actually, let me just expand them while we do them. Right there. Wait, is 1. Two.
So in the consolidation, like that liquidity pool is like the end of the level.
Give me a second.
Okay.
And that would be peak formation low. PFH. Peak formation low. Now, what was your question now while I mark this up?
It's just like the little details. So like so since we're on a downtrend for these levels, the bottom of your rectangle where it's like bordering the bottom of the liquidity in the order block, those are where we mark the end of our levels. Because I've seen some people do it where they box off above the liquidity, above the order block.
You know, it doesn't have to be precise, only that you're able to identify the pushes.
Got it.
All right. and really that's what we're doing. You know, if you ever see, watch Steve, how he doesn't even do boxes. He does this. That's it. You're level 1, you're level 2, you're level 3. That's it. That's how he does it. Okay. So now watch this. We're going to go ahead and we're going to mark this up right here. So in reality, peak formation would have been, oh gosh, let me switch this. Boom, boom. Okay. This is peak formation low. Makes sense? This was your level 3, the widest part of the mouth, the spread between the 200 and the 50 MA. The opening of the mouth is level 2. The crossing of the EMA is level 1. Peak formation. Did you catch that?
Can you say it one more time though?
Okay. Yep. So peak formation, right? And peak formation was also identified as the widening of the tips here, right? Level 1 is the crossover of the 250 and the 200 EMA. You see that? The blueberry, I'm sorry, the waterline and the Mayo line. Level 2 is identified as the widening of the mouth between the 50 and the 200. See how it's getting wider? Level 3 is the widest part of the mouth between the 50 and the 200 EMA. Make sense?
Thank you.
Now, yep. Now, then we have peak formation. And in this case, W pattern. So this would be included in peak formation low, this SMS. So the value of reading the levels is that you can identify where you are within the levels so that you can find an entry every time you come to the market. So you know if we've only done one push like this here, all right? In fact, hold on a moment. Let me do something really quick. I'm going to grab, where's the arrow? I see, oh, path. That's it. Okay, once you've hit peak formation, level 1, push down, right? On this push here, you can, now that you've done level 1 and you're crossing over, you can wait for a pullback. And the pullback is into your 50 line. See all this consolidation pull back into the 50 for another entry. And then you get into level 2. Since your bias direction is for a bearish trend and order flow is all bearish, we should expect 2, 3 levels, right? Now, on a counter trend, look how many levels you went up. This is peak formation, right? Here's level 1, here's level 2, and then this is quite possibly level 3. If none of this existed yet, we would wait to see what happens. But take a look, all this consolidation, you see how the EMAs are now tightening up and all they're doing is going sideways? What is this? You actually showed me that on a chart what this is. What is this? This is all reset.
Okay.
It's a reset. All right. Go ahead.
I'm trying to wrap my head around the significance of a reset here. So that's really part of the peak formation low before we switch.
Okay. So here's the idea behind a reset. If we know peak formation high, we know peak formation low. This is the major, this is the swing high, swing low. And this is a big deal because within the inside of here, as long as we continue to go sideways and not develop a new peak formation low, we are either moving sideways or we're still counting levels. Until we create a new peak formation low, can we count peak formation low to a new level 1? I'm going to show you something. Let me see. Okay, so I'm going to box this off. Okay, watch this. So this was, and take a look, broke through the 50, indicating we are approaching a level 1, right? You see it? Broke the 50 line, which is the blueberry, and there's our level 1. So we have a level 1, right? Oh. Whoop. We have a level 1. We're expecting this to create a new level 2, but it doesn't. Take a look what it does. Just bumps up a little bit, and then it drops. You know, and what happens is when it drops, the price action starts to go sideways. And you could see this. That's why last week I had difficulty finding an entry, because I'm looking for a firm crossover into the new EMA. And yeah, so anyways, so this here would be reset. Why is it reset? Because it's definitely not level 2. And it's definitely not a peak formation high. And reset can be identified based on consolidation of the EMAs, the 50 and the 200. This is the significance of the 50 and the 200 EMA. So the salt in my cookie. Did you catch that?
Yeah, that was really helpful.
Okay. And you know, truth is this. If you've got your chart moving sideways, when's the biggest problem that day traders have? It's during this sideways. In the past, I would have got hung up trying to trade this, trying to find it, trying to anticipate it. But now I just wait till it's done. If I do get in, it's going to be small lot size. It's only because I want to get a little bit of the action, but I'm not really sure. So, you know, it failed to give us a real level 2, because a level 2 would have looked like a widening of the 200 and the 50 MA, and we got none of that here. It widened and then it dropped. So most likely, if I did get in right around here, which is a high likelihood I probably did, I would have had pushed up, right? Grabbed at least 50 pips, let a runner run with a trailing stop loss, stop me out, and I would have just captured my initial 50 pips. Does that make sense?
Yeah.
Because now price just is now breaking, and it broke this, and it broke down here. Okay. And another thing is this. Let me show you. When price did do this, right? I got a couple of things. I was dropping my fibs, right? So I know that I've got this as my swing high, swing low, my fib line, and I immediately have my 50 line identified for the 4-hour chart. So that's the 54-hour, right? And then also when price, let me see something, gave me this here, right? Because this pullback would now let me know where my internal range fib would be. So I have my external range fib, which is the peak high, peak low. And then I have my internal range. All right. So this here would indicate my 50 line, and I'm going to mark that. Okay. And I'm also going to change this to a dotted line. So this way, a dash line, that's good. This so that we know that, and then I'll remove this here. Okay. So when price did drop down here into this 50 line, remember, I'm looking for 50 or better for a sell, because I'm a trend trader. I'm looking to capture, because I'm not looking at counter trend. It's too risky. The probability of counter trend is really weak at this point. If you caught it here, is a good counter trend. Boom, you got all that. If you're catching it here, this is not good. If you're catching it 50 or below, this is a good counter trend. Yesterday, caught it here. This is a good counter trend because look where we are. You know, we're really deep in the money. You know what I mean? Okay, so to catch this here, are you with me?
Yeah.
Okay. So to catch it here, I would not do this. This is a low probability trade. What I am going to say is, okay, now that my internal range 100 top of the fib is here, right? And in reality, this is my internal peak formation high. All right. The major swing structure is way at the top here, but this is the inside. All right. And this is the 36 line. I marked out my 50. And every time price bounces off this and pulls back, so as long as it does not break this, because this is a major swing structure. If you remember, when I was identifying the major swing structure, was that squiggly line? It was this, right? Oh, shoot. Right here, brush. It was, this is the major, right? And then all this is minor, and here we are with a new major. Okay, did you catch that? You catch that, Steph?
I believe so. You cut out. Yeah, you cut out, but you were just saying that you were drawing out the major and then
Yes.
we're looking at the minor.
Yep. You can identify that this is a major swing structure, right? This up here is a major swing structure, and this is a major structure. So it dropped like this and like this. Yeah.
Yes.
Okay. So that being the case, I'm dropping my fibs and I'm marking off my 50 line. I'm going to remove the fib, just try to clean it up a little bit. And typically I do that when, you know, as soon as I mark my 50 line, I don't leave the fib there. It's kind of like just a lot of stuff on the eyes, you know. Okay. So, and now that we're ranging sideways, I know that I'm still, institutional order flow is still for a, I know that institutional order flow is still pushing down, and price is moving sideways because of the squeeze of the 50 and the 200 EMA. With that squeeze, I'm still, and also knowing that the institutional order flow is for a bearish trend, I know that every time we come up high, we are in a good place to find a sell. As long as we don't break this, sell, sell, sell. Did you see that?
Yeah.
Sell, sell. And then, of course, we're so close to the bottom here. And in reality, once it breaks the 50, if I'm not in the trade and I exited it out already by here, I typically don't look for an entry. I wait for it to actually test it. Yes, low probability, and we're moving so close to testing that I just wait. I wait for peak formation low to find its bottom. And in this case, it did. Okay. So that's the significance of reading levels here. Okay. Now, let me show you something. So this is level 1, level 2, level 3, peak formation low, reset. If this is a reset, can you now see our level 1 for a push down? Can you see it?
I mean, I think I know what you're talking about, and I don't understand it. Like, so you're talking about that area that's not boxed off, yeah.
Right there.
And because of the widening, that's why you chose it. Like, you're not getting that crossing over anymore.
Yeah, yeah. So yeah, you came out of a reset, and the fact that it crossed over here and started to widen. This is you know, yeah, this, I would call this a reset, but this would be a level 1 because this is the beginning here. And in reality, it'd be, we could even do this. I'm going to show you. This way you could be really clean with identifying your level 2. Because you want to know, so really what we're doing is trying to identify how many more pushes we have. How many more do we have? Because once you get to level 2, right, you could expect it to push down for a level 3. This is actually your level 2. It's very shallow, the widening of the mouth, but that's it.
Yeah. This is definitely a lot more challenging to identify right now.
It is, yeah. And this became your level 3, widest point of the mouth, the 50 EMA, you see it? So let me, it is the hardest part. And they say that counting levels takes a trader looking at charts like a year or more. And I picked it up pretty quick. I don't know why. It's just the way I see patterns. There's some things I don't pick up quick, but this, for some reason, I picked it up fairly quick.
Okay.
Okay, so that's level 1, level 2, level 3, peak formation low. Now, let me hold on a moment. I'm just gonna look at. Let me see something really quick here. Time is at 2:09. All right. Okay. All right, so let's take a look where we are on the chart. Do you have any questions on any of this that we've gone through? Any questions? Stephanie, can you hear me? Hello?
Sorry, my internet's dropping like crazy.
Oh, okay.
You don't have to go back, but just.
Do you have any questions on any of this? I'll tell you what I'll do, Stephanie, is I will send you the best I can every night. I'll send you a markup just before middle of Asian hours, like around 9 to 11 o'clock in the evening. I'll send you over my markup of where we are within the market makers cycle, okay? Which is, of course, counting the levels. And then eventually you'll just be able to see it. Okay. All right.
I think I'm back.
Okay, good.
Okay.
That's okay. Do you have any questions on any of this?
Did you happen to say anything about the most recent level 1? Well, I've been gone for like 2 minutes.
The present time pricing.
Yeah, exactly. Present time level 1
This here.
pricing.
Yeah, let's look at it. Okay, so we got level 1, the crossover of the EMAs, right? Level 2, the widening of the mouth of the EMAs, 50 and the 200. Level 3, the widest point of the mouth, and of course, peak formation low. We have a new level 1 right here, and we identify level 1 because we are approaching crossover of this here. Now I'm going to explain something. If this does not cross over, right, these EMAs, we could just end up with a scenario like this. Hold on, polyline. Price could just do this. And then give us the, make sense?
Really? Okay.
Which is a W pattern.
A W. That'd be a big W.
It will, but take a look. Look. See that? Look at it. It gave us this.
Yeah.
Right? So it does it. Bitcoin does that. It does it. Huh. Where did the rest of the chart go? Oh,
Mm-hmm.
okay, there it is. Okay. So and then that being the case, this is not a level 1. This is a still a formation of peak formation low, because then peak formation low would do this. Make sense?
Yeah.
And then this would actually end up doing that for our level 1. You see it now?
Yes.
Okay.
So maybe this is off topic now, because I was staring at this point of the chart, like the center of the hypothetical W, and I wanted to take a short from the top of that wick. Now, how risky is that really?
Well, okay, so that's a good question. Let's measure it. And the only way you're going to know is if you measure it and see where we are within institutional discount range. So we know that this is a major structure. This is all minor structure, internal liquidity, minor structure. So we know this is peak formation low here. So let's drop our fibs. This is the proper way for us to evaluate whether or not we should get into the trade, right? Okay, so there it is. Okay, so let's move this right here. Okay. So based on what you see there, right? Now, I'm going to tell you, and let's look at the candle. Does price have to go up to this 50 line? Oh, actually, take a look where we are there. We are there. We're at the 50 line. And you've got a 1 hour.
Yeah.
What is this? It is an engulfing. So you know what? I'm going to go to my account, 215. And because we're so close to the border of Mexico there on the bottom, I'm only going to do a small 2.0. There you go. You know, I would have preferred to have seen a really nice break above all this liquidity. And also, I'm going to do a really tight stop.
Okay.
And my stop loss is yeah. Now, the reason why I'm doing only a small amount is because take a look at the time frame. It's 2:16 in the afternoon. Ideally, I like to find my entries in Asia when the new market opens. Yeah. But this is significant. Yep. But on the 1 hour, this is significant. Let's drop it to the 15, see what that looks like. See that? All right. So let's take a look at where our pools of liquidity are sitting. Okay. Actually, it's easier to see it on the 1 hour. Hey, Justin, you still with us? You catching all this? I think he's okay. So let's take a look. This here is oh, this is significant. Let me see. All right, right there.
Okay.
There's a pool of liquidity right there. I'm going to change the color on this so you could see it better. Give it a little background. So take a look what price did, right? Price basically, and that's a big deal because look, you've got liquidity here, squeeze of liquidity here. It broke this liquidity, but the significance of this is a lot of liquidity, and take a look at it pinned it, but did not create a candle to close above it with forward momentum. It just pinned it and stayed under it, keeping all this liquidity super tight still. Make sense?
Okay.
So that being the case.
Yeah, I missed one thing because the internet's getting really noisy.
Uh-huh. Okay, so yeah, that's a big deal, you know, that it went up and grabbed at that liquidity. It failed to close above it, and then the next candle closed here. We could see a retest of this, which would be most ideal. So it would basically be another pin that would push up into it, close below. So if you get another pin that closes below, I'm going to drop more money into this for a sell, because you know why? It's probably a likelihood we're going to break this 29 and continue to the downside.
Okay. Yeah, that's what I was looking like at, of just, and I didn't do it because, you know, I'm new, but I wanted to put like a buy order for a short near the top of that pin, because I'm gonna go out and garden and hopefully it'll get caught. Like, I just, you know, I was like, how risky is this? Because we're in a level 1, but ultimately we're going down, and I feel like this could be a really good short.
Yes, you're right. It can be. And remember, what are the parameters for continuation of a pullback? Because this really is a classic pullback against trend, and we're entering on the pullback, which is 50 on the fibs or better. We pin the fibs. I mean, we're real close, but you know, this is just how you know, price action works. Doesn't have to actually go through it. Ideally, we would like for it to go through, and I was anticipating it would go through, and it still could go through, because I'd like to actually see price go up into. We're on the 4-hour right now. I'd like to see price go up and break this 50 and test somewhere within this range here, which is this. See all the sideways liquidity that we marked up as a reset? I would like to see price come up and test this reset, this entire space of liquidity, which would look like that. That's actually right there. All right. That's that would be most ideal.
You know, and these levels,
and you know, it actually did. Take a look.
It did. Oh, the bottom of it, is that what you mean?
It wicked into it. Yeah. See the this wick? It wicked right into this here. So this is a lot of sideways movement, liquidity built up, market maker gathering contracts, buys and sells, you know, all that activity has a strong foundation for a resistance. So there's all this resistance here, and it wicked into it. See the wick?
Yes.
Yeah. So your answer to your question, whether that was a good move to get in on, yeah, absolutely. In fact, I just got in it just now. And think about this. Why did I get into it? Because prices actually gave us an engulfing. We've got a little bit of pullback. You could wait for a confirmation candle before you actually enter in. The confirmation candle might be on the 15-minute or the 5-minute. So you see that here, this is a 5-minute chart. You see this order block right here.
Yeah.
You'd put your stop right there, right just above it. And that's it. So it's a very tight stop loss, right?
Yeah, that's very tight.
Yeah, very tight. Yeah. So your risk is minimum. Right there. So if price breaks above it, you know that the market maker probably has other ideas better than the thesis that we're coming up with. But if he comes to and he gives another confirmation engulfing candle, pin hammer to the downside, boom, that's a M pattern on the 15 and 5-minute chart. Got that?
Yeah.
Cool. All right. So that's it. That's levels. That's present time price action. And just going back into why I got into yesterday's trade. Today's I'm still in fact. The reason is because if you take a look on the 4-hour chart, all right, Again, bearish trend is still to the downside. So this trade that I got in is counter trend. And if this is SMS, right? So that's your SMS, switch your market structure. We have a weak BMS. Look, this would be our BMS. It's weak because look, price is pulling back. I'm gonna close my positions if what time is it? It's 2:23 at 3 o'clock. If this candle, correct. If that candle is a doji, that basically means that your entry you called is correct.
Yeah, it's all just probability. Like you.
It is probability, yes.
Yeah.
And we're looking for the highest probability. But you could see there are patterns to it, and we're looking for confluence. We're looking for confluence to tell us. So, what is the confluence on this entry you got in here? Can you tell me? Can you kind of reason it out?
Okay. Well, that pin hammer.
Let's get some organization in your thinking first. How about that? All right, ready? So I'm going to ask you, and you could answer it based on ready. So first things first, what is market structure confluence?
So for this point that we're at.
Yeah.
So we're at this point where we could be breaking minor market structure, but we haven't yet.
Correct.
We're in the range of like a bunch of liquidity.
But so when I'm based on reading SMS, BMS, higher, and higher low. What can you tell me about market structure, which would give you some confluence as to why this was a good entry for a sell?
Oh, because I think that candle shows that we're being rejected.
Correct.
At this potential BMS.
Yes, that's number one. Okay, so rejection on the BMS, correct? You know what? So that's number one. Okay. Where is our overall bias direction? Our bias direction is
down.
Yep, it's down. Correct.
Yeah.
Okay. So now tell me, is there a candle? No, I'm sorry, chart pattern that would tell you?
I mean, you could possibly see a Head and Shoulders.
I know it's kind of, so I don't know how far you got into market makers methodology. He's really good with the chart patterns. I'll identify it for you. In the let me show you. Hold on a moment. Okay, and your can you see Head and Shoulders? Okay, Head and Shoulders will only be on a top and bottom. Right now, we're in the middle of a range, right?
Oh yeah, sorry.
So watch this, ready? So in this case, right, if you're going up, right, and then peak formation, and then you're going down. Oh shoot, I'm running out of space. Okay. This is called an A. I'm sorry. V A. Yep. So it's a V. V. This is an A. Pullback A. Do you see that?
Okay.
Let me. That's how he marks it up like this. Cynthia probably would know this. So this is a V. See it? V.
Okay.
Yeah.
And A will go underneath those other. On the, okay.
Correct.
The letters are defined by the pullback.
Correct. Yep.
Okay.
So the chart pattern we have here is we're going down, so it would be an A pattern.
So what would the ones be at the top at the peak formation? Or at the top?
That would just be peak formation.
Okay, no A's or no.
No. So here's what you have, right? What's this? So you have right, peak formation. Right there. So that would be peak formation. But in here, these are the pushes. You see it? And the levels. You see the levels?
Yeah.
1, 2, 3, peak formation. 1, 2, 3, peak formation low. But here, these pullbacks, he calls them V's here. He calls them A's here. The pullback is going down, pull back up. And then you can make an A pattern. So this is an A pattern. Second leg. This is the second leg of the A pattern. This is the first leg off of peak formation high. This is the third leg. That's how he talks about it. I studied so much of this stuff. It's absolutely mind blowing. I'm telling you, it's kind of funny that I even have the ability to articulate it to you guys. You want to know why? Because I never really took time to talk about all this stuff. I'm just regurgitating stuff that I heard.
Yeah, that's because you understand it.
It is, but I never taught it. So I'm just kind of like going through it and I'm like, how do I know all this? But it's like it was processed in my brain so much. Like literally I spent hours and hours just going through this. My objective was just to perfect it. And I don't know, I'm kind of like surprised at myself. I'm like, how do I know this? Because I'm only pulling it out because you guys are asking. Other than that, my brain knows it, and I don't like it's internal, but I don't. In my brain, I'm not calling this an A anymore. I just know it's a pullback. You know what I mean? So to me, all the marking up is very, very important. Don't get me wrong, right? And I would highly recommend that you mark up. But there is going to be a point where this is secondary language and the markups won't be necessary unless you get lost, like you're in a whirlwind or a tornado and you need to kind of like ease your mind. And which sometimes I do. I get caught up like that, especially with the bullshit like this where it starts going sideways and I'm like, the fuck. Okay, so does that make sense as far as this A and V?
Yeah,
So okay, so on the chart pattern, right? Where are we? We're on a pullback A. Does that make sense? Yes. That's the chart pattern. So then based on the chart pattern, next confluence would be the candle pattern. And what's the candle pattern where we just seen here? What is this?
It's an engulfing.
Yep. Yeah. Engulfing. And actually it's an engulfing
hammer
with a
too,
pin.
Right?
Yeah, it's like an engulfing pin hammer. You see that, Justin?
Yeah, and I wanted to talk to you both about candlestick patterns too. I mean, I've been using this theory. It's basically this confirming entry rule candlestick pattern that it actually worked for me on a couple of shorts I did last few days. Basically, what it is you have your confirming entry candle, and the basis of it is basically if you have your like high probability point where you think that there's going to be a reversal or an opportunity for a short or long, whatever it is, is that it has to get broken by a certain amount of pips. And then you basically use 3 candlesticks. And so for example, like candlestick number 1 has to get broken by a certain number of pips. Candlestick number 2 has to essentially cover the lower 2/3 of the first candle, and then candlestick number 3 has to basically reach the top of the first candle by at least 15 pips. And I guess what it does is just confirms your entry. And so what I've been using that and measuring my pips, and actually it's been working so far. What it does is it's supposed to help eliminate traders from missing out on opportunities because they're looking for a morning star, they're looking for an evening star, they're looking for a railroad track, they're looking for, like you said, a penny hammer. They're looking for the engulfing. If you just follow those rules, essentially, you're training your eyes to, you know, basically look for, making sure the candles follow those confirming entry rules, and it's supposed to essentially do that. I actually had the measurements. I was actually doing a drawing for you, Julie.
Yeah,
So
yeah.
get your
Uh,
input on it.
oh, I would like to see it. It sounds very, very interesting. It sounds very detailed too, and that's interesting.
Yeah.
Yeah, yeah, for
I
sure,
mean,
for sure.
because essentially, what the market maker, its job is really to do two things. I mean, number one, it's like if that level is not going to hold, its job is like to not show us a valid confirming entry setup. And the other thing is if they truly are taking stops, they're hunting for those stop losses.
Correct.
Then confirming entry should set up and should show itself, so we have the opportunity to catch it. So I mean, I've been digging deep thanks to
Oh,
you.
that's deep,
So,
bro.
yeah,
Oh
yeah,
yeah,
yeah.
I like that.
Been going in hard, man.
Wow. Oh man, you got to jump on the Zoom and show us.
Okay, yeah. I'll put the drawings in the Discord for you.
Yeah,
But
yeah.
and it's so cool because even I thought to myself, I was like, man, how's that gonna morning star and evening star gonna follow those rules, because the doji doesn't fall in the low 2/3, but it's the engulfing after the doji. And then when you look for the third candle, oh god, I'm sorry,
Yes.
you want to say something.
Oh, are you talking about Three Crows and Three Soldiers?
Well, yeah, that too. It works for that too.
Okay,
It
okay.
really works for
Yes.
all of it. I mean,
Yes, yes.
essentially, it's to eliminate the because that's where I was getting hung up. But
Uh-huh.
I gotta go. I sorry I kept jumping in and out, but yeah, I'm gonna draw those up for you guys, and please let me know what you think.
Nice, nice. I really would love to see it. I only learned of Three Crows and Three Soldiers just probably about a month ago from my daughter's boyfriend.
Yeah, and that was the problem, was there was so many candlestick patterns that I was trying to find, and
Yeah.
it just made it really really hard, because you can really get caught up in that. And another one that people day traders use is bullish and bearish flags.
That's right.
There's just so many that I try to find something that would just kind of simplify it and
Nice.
work lovely. So I'll share it with you all.
Yep. Nice, nice. We'll do another Zoom, maybe
Okay.
tomorrow, later this evening or tomorrow. All right.
Yeah, maybe tomorrow, but yeah, absolutely. But hey, I'll see you guys later, and thank you so much.
All right, you bet, you bet. All right, Justin, we'll be
Thank you.
ending off here soon. I just want to did you where's here are my notes. These are the three confluences: rejection on the BMS, and remember our where we are entering a trade with trend. That's the most important thing. All right. So and we're trend traders. I'm a trend trader, right? And when I see stuff like this, that's pretty, I'll go in and enter in. All right. But for the most part, I'm a trend trader. And I like that you identified this, because we've got our bias direction, institutional flow bearish, three confluences, which are the three important ones: market structure, which is rejection on the BMS, right? This is our BMS line, and it rejected it. We also hit the 50 on the fibs, which is part of market structure, which is good. 50 fibs or better. We hit it. Chart pattern was an A pattern, right? Which is a pullback. Really, it's a pullback. This is an A pattern pullback. And then, of course, the candle pattern is engulfing pin hammer. These were the three confluences for the decision to take this for a sell, and that was correct. So far, it's holding. We have a tight stop, and we put our stop based on a 5-minute candle right here. We identified the nearest order block above it, dropped it in, boom. Price breaks above. You could put your stop up here. The only challenge, it's a lot. It's quite a bit. It's a huge loss. I'd rather get out here, right? Wait for him to give us a full M pattern, maybe.
Yeah.
And if he gives us the M pattern, there's your confirmation. He might even hit it a third time. which you might have read about that. That when and he does it the third time, well, you got him. He's just being greedy. But this is where the persistence comes in, to stick with it, because you formed a biased direction and you're going with your biased direction. So in this case, it's still moving along very well. Okay. All right. So the reason why I got in yesterday's trade, which I'm still in, I know it's a counter trade, and I've decided, because I've got right now 1.0, and it's down here. The entry was down here. It was a very, very good entry.
Nice.
Yeah, it was really good. It was super tight. And I only caught it so way down there because it was actually yesterday. Once I seen that this engulfing and then this pin hammer, which is another engulfing, I got in on this one. Once it dropped here, and it was on the 1 hour chart, and the 1 hour is a big deal. We have a test of equal lows. We have an SMS. Price does not want to come down and break equal lows, BMSing. So since it tested right now, this second candle from yesterday is why I got in. I held it all the way through until now. So this is where it was yesterday in the evening. And I also hodled. I DCA'd on my hodl account.
Yeah.
Yeah, quite a bit. Because, the truth is, I don't know. This might just be the bottom. I don't really know,
Yeah, it's true.
I don't really know. All I know is that if it BMS is here, I know what I'm looking for. I'm going to look for a pullback and get back in and watch it drop again. So, yep, that's why I got in on this trade yesterday. It's actually that. So market structure was telling me that we did not BMS. We hit a lower low, a lower low. We also hit peak formation low. And that's the market structure. Chart pattern was basically a multi-week W pattern. See it? First leg,
Mm-hmm.
second leg going up. That was
Yeah.
my chart pattern. And my candle pattern, of course, was from yesterday. A little risky on the entry, but when I'm risky on the entry, I'm okay because the stop loss is so tight. Yeah.
And the reward is so much better. You're right.
Yeah, because my reward, it hit all the way up to 8-1. And then I was expecting it to hit the 50 line, which would have been a 10-1, which it actually did. And I closed out all 2/3 of my position. I've got 1/3 left, which is giving me $2,172 at this very moment in time, and
Nice.
continuing to drop, 2,169. Yeah, so it is
You'll
what it
get
is.
a bounce.
Yeah, but I still have. I closed out 2/3, and 2/3 closed me out at 3,561. So I got 3,005, another $2,000. This will be like a $5,000 so far for the week. And if I can find
Good for
another one,
you.
try to bang out some more money. We'll see. Okay, and that's basically it. Concludes the session. So we covered levels, and we could cover some more levels. I know that's something that'll take time.
Yeah.
We covered your entry for a sell. We talked about your confluence as to why you got in. We talked about the market structure, why you got in, the chart pattern, why you got in, the candle pattern, why you got in. We talked about my entry from yesterday. We talked about how the market structure, why we got in, the chart pattern, and the candle pattern of why I got in on this.
Okay.
And that's good. That was a good session.
Very good.
Yeah, let me close out this Zoom. All right. Hold on a moment. Oh, I gotta turn on my upper screen here in order to close the Zoom out. Okay, stop sharing. Okay, recording stopped. Use email